Hi, everyone. This is Joe Slezak, Director of Marketing and Business Development with H2R CPA. I'm joined today by Kieran and Lucas Rihely, also of H2R CPA. We've come together to provide a brief update on PPP loan forgiveness and the tax consequences of the PPP loan program. Kieran, to kick off the video, my first question is going to be to you. When can companies apply for PPP loan forgiveness, and are there any issues that they should be concerned about during the process?
Joe, that's a really good question and one that many of our clients have been asking. So the answer really depends on who you bank with. So let's just talk about the process for a minute. The SBA will be the ultimate administrator of forgiveness and granting of the forgiveness, but you don't apply with the SBA. So the SBA portal is technically open right now, but in order to apply for forgiveness, you have to apply with the bank that you got the loan from. They're going through their processes, they'll accumulate your documents, and then they'll turn that over to the SBA portal within 60 days of you applying with them. So what we're seeing right now is that each bank, much like in the original application stage, has a different process for this. There hasn't been really any standardization, and there's still a lot of uncertainties. So as the larger banks are now starting to unroll this, the PPP forgiveness portal through the SBA has been open since mid-August, but we're only starting to see many of the larger banks come online now to actually accept these applications. We've also been reading that there have been several thousand applications submitted to the SBA, and the SBA is not giving out any data right now on where they're at with those applications and whether they've even started to process those. So the biggest issue here is really the timing and the uncertainty. So as you work through this process, there are several things to consider and issues that need to be addressed. The first one is the concept of blanket forgiveness. From the banks that we're seeing right now that are accepting these applications, most of them are not accepting applications for people that received under $150,000 because there's still the thought that there's going to be a blanket forgiveness program to cover those loans. Those people are still going to eventually have to fill out a form and apply for forgiveness, but I guess it will be looked at and rubber stamped or moved forward without much of a process. So they don't want to start accepting the ones under 150 right now. They are starting to accept some that are over. What I've been telling clients is this isn't really something that you want to be the first in line for unless you have a compelling reason to do so. So as they work out the bugs in this process, it will be a little easier. I think what the banks were hoping for was more guidance and legislation from Congress that hasn't come in the form of a new stimulus package over the last several weeks. So they're taking it cautiously about how they're accepting these and kind of going slowly through the process. Once your application is with the bank has 60 days, but they have to submit it to the SBA. But you don't have to apply for forgiveness for up to 10 months from the end of your covered period. So you do have time to wait and apply. If you have any issues in terms of headcount or other things, it might be better to look at what that looks like now and what it might look like later. If you have a very clean application where you didn't have any drop in headcounts or other issues, and you use the majority of the money for payroll, it's going to be a simpler process if you can use the EZ form. If you also used all the money for payroll over 10 or 12 weeks and you're picking the 24-week covered period, I believe you don't have to wait until the end of the 24-week covered period to apply. So you can apply when your funds are exhausted. And if you're showing that you're just using them for payroll costs, that's going to be easier. You don't have to provide as much substantiation for the other things. So if you don't have any real issues with headcount, you used all the money for the covered payroll expenses, you might consider applying for forgiveness now. That's a much cleaner application. If you have some uncertainty or other things or there's questions, my advice would be to wait and see how the law unravels and what they do with the blanket forgiveness. So that was a bit of a long-winded answer to your question, Joe, but technically the portal's open. People can apply now only to the extent that their bank is taking those applications. If your loan was under $150,000, the bank's probably not going to accept your application now, and you wouldn't want to apply anyway until you see what happens with the blanket forgiveness. If you're over the $150,000 limit, I would consider the facts around your application. Is it clean? Is it easy? Can you get it in now? Do you have some issues or the things you want to wait on? You have time to do that. So that's kind of where the process is right now. Nothing about this has been easy, and there's still a lot of uncertainty on the back end, just like there was on the front end.
So Lucas, moving on to the tax portion of the video, have there been any changes to the tax laws that our clients should be considering in regards to year-end tax planning?
Sure. So under the CARES Act, where the PPP loan forgiveness is detailed, the CARES Act added to the tax law that the PPP forgiveness is exempt from taxable income. Normally, taxpayers who have their debt canceled realize taxable income, but the PPP loan forgiveness is tax exempt. And at the time, it appeared that the expenses that were used for the PPP loans would also be deductible. And coming from comments of some congressional members, that was the intent of the law. However, when the Treasury took the CARES Act in its entirety and added it to the existing tax law that's been in place for 100 years of statutes, regulations, case law, they needed to apply that one provision that excluded the forgiveness from taxable income and how that affected the rest of the tax law. So in the tax law, there's a code section called 265, which states that expenses otherwise deductible, if they're attributable to tax-exempt income, those are non-deductible. In the IRS issued notice of 2020-32, they applied section 265 to the PPP expenses and stated that the expenses that are used from PPP funds that are later forgiven are not deductible. This includes your payroll costs and your non-payroll costs. So looking towards the end of the year, companies that are doing their year-end tax projections and making estimated payments, they need to keep in mind that some of these costs that they've paid out of the PPP funds, if they're expecting forgiveness, may not be deductible in this tax year. And they should discuss with their advisors how they should adjust their estimated payments accordingly.
So are there any other tax ramifications that our clients should be aware of as Congress and the Treasury finalize the PPP loan program?
So there is a Senate bill that was introduced back in May and referred to finance that makes these expenses deductible because according to comments again from some congressional members, it was the intent of Congress to keep these expenses to be deductible even though the forgiveness is tax-free. That Senate bill has about 35 co-sponsors, 2/3 Republicans, 1/3 are Democrats. So there is bipartisan support, but we don't know if that is going to get passed at some point by Congress. So dealing with the law that we have now, the expenses are non-deductible. We're keeping an eye on additional guidance from either Congress or the IRS. I think that the IRS is waiting to push out guidance as to how to treat these expenses in this year's tax filings, because it may be the case, and I think it's very common, it'll be a very common case that taxpayers won't receive their notice of forgiveness until next tax year, even though they're incurring these expenses this year. So you're gonna have tax exempt income in a later tax year and potentially retroactive effects to non-deductible expenses in the previous tax year. So again, I think IRS and Treasury are waiting to issue guidance, perhaps to see what Congress is going to do with these expenses. But as it stands now, the expenses are non-deductible. And again, when you're looking at your estimated payments coming towards the end of the year, just keep that in your mind and talk with your advisor what kind of payment positions you'll be taking.
So Kieran, if this was a written piece, there's a pretty good chance that we would have created an executive summary for our clients. So with that thought in mind, what are the final recommendations that you can provide to our clients in regard to the PPP loan program?
Joe, I think the overarching theme or the summary of the program and where we stand right now is just uncertainty. You know, there isn't a lot of written guidance as to how this should be administered. And by this, I mean the forgiveness process. And that's not surprising considering the way the entire program went, right? It was rushed out in certain steps and the banks and others were playing catch up from the beginning. That really hasn't changed. I think there's uncertainty in the political landscape, and the pressures of that change the public perception of the program, the media coverage of the program. A few bad actors seem to spoil some of the good things that were done by the program. So each of our clients has to look at what this meant to them, then the intended use of the money. Did they use it for the right things? Are they ready to apply now? If they have some uncertainty in their business still, and that uncertainty is leading to making the application a little more difficult because of what's going on, our suggestion at this point is to wait and see how this unfolds. So as accountants, we don't like to give guidance on things that aren't concrete, but as we wait, we just haven't gotten any concrete guidance in different areas for this. So whether it was some of the things that Lucas mentioned in the tax law that may or may not change as we work towards the end of the year and see what Congress can get passed, I think those things will definitely impact the PPP, whether that's through a next stimulus bill or something like that. So it's really sitting down, working with your advisors, understanding your situation. The PPP program created a lot of liquidities for companies. Some companies were able to use that to clean up their balance sheet a bit. So working with your banks to understand A lot of the banks seem to be treating this as a mulligan year. I've asked a lot of questions about how is PPP forgiveness going to be treated for debt covenant calculations and other things, and just haven't gotten a great answer. I think what we're hearing from most of those banks is, hey, we just want to get through this with our customers, and we'll deal with that in 2021. So unless you have compelling reasons or things going on that is really forcing you to make decisions on this, I would, take the facts that you can, talk to your advisors, get the best idea of what's going on. But there is a lot of uncertainty, and I think that's the overarching theme right now.
Thank you, Kieran, and thank you, Lucas. To our audience, if you have any questions regarding the PPP loan forgiveness, please do not hesitate to reach out to your HTR liaison. We're more than happy to help you. Once again, these are challenging times, and we simply ask that you stay safe and have the best day possible.